Good morning, everybody. Welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPick.com. Welcoming you to Monday, another Monday. Let's just call it Rally Monday. I guess Yellen is going to speak, and I guess we can wait for the sell-off until then. But anyway, before we get to all that stuff, our event for June 11th, I believe Mark will be adding a webinar to, I think he's already put a webinar out. We'll probably put up another one shortly prior to the event. But again, just going through what makes iron condors and butterflies work. We try to work through the specifics and some trade management as well when things aren't exactly going your way. That's the idea, trying to evaluate it, whether the trade is worth staying in or just killing it, or seeing if there's some kind of reasonable, cost-effective adjustment. But mostly, too, is the conditions that make a fly on a butterfly or an iron condor work. Right now, though, what do we have? We have, I believe we're trying to get up to those all-time highs. Trying really hard. We're already at 211 for the SPY, and I believe, if I'm not mistaken, oil is helping us up now. We are at highs for 2016. All right, there was the sadness, which we seem to get to at least every year at some point, and then twice last year in 2015, and once this year, actually twice in 2016. As we move along. So when you look at stocks, now the volatility was marked up a little bit this morning VIX-wise, but I'm kind of sitting here. Maybe we don't have a rate hike in June. It looks like the bond market's already saying no. Volatility in VIX is, I believe, again, at a year low. So you've got kind of a lot of, this is really odd. Because you have kind of the major macro event with this Britain leaving the EU, but at least for the short term, vol is very low in the VIX, and the volatility market is basically just pricing vol in the term structure. When you look at VIX futures, they're down today. Pretty much you've got the June serial. Here's really the key one to look at is the July serial is still trading about $3.30 over a level we've seen most of the last 2 months for that second month out as time is running out. But that's where the premium is. If you want to buy protection, you're going to pay almost $17 for a VIX future. So traders are putting the premium in the futures and not so much in the options. And to be honest, they're really not pricing this Brexit thing like it's a big deal. They're pricing it in, I'd say, maybe a little bit above average future premium, but not much relative. So whatever the central bankers have done lately, they've taken a lot of juice out of the market. Let's put it that way. Taken a lot of juice out of the market. So it looks like we just kind of want to meander higher. There is a little bit more action in the banks. I think my favorite really trade idea in general is what used to be the toughest trade, oil, now looks like it's going to be, we're like pinned around. Let's see, I'm just looking at, it seems like that drop in oil is over, at least for the short term, or we're back up to $50 for the spot price for crude. Trades that look good. Are oil kind of staying around 50, probably not going much below $47, $45, and it doesn't look like there's enough impetus to push it over, not without OPEC coming up with a deal, but time spreads. buying call time spreads, maybe even selling some out of the money put spreads in the big producers. That looks like where at least that market is at least flatter to slightly rising. And as far as opportunity goes, is anything really going go-go? Well, I mean, the S&P 500 is up 0.5% right now on no news. Mostly the news is things aren't so bad and everybody's jumping in. The payroll number was not great. They're ignoring Brexit, and the least buyers are ignoring just about everything. So it's just one of those things where you kind of get out of the way. It looks like we're like slowly continuing like 2 steps forward, maybe 3 steps forward, an occasional step back, and that's it. But I still like playing oil as sort of a flat to slight upside trade. I think there's a lot of support for that now with production cutting so much in the U.S. And you're going to get kind of, you want trades that are looking for sort of stability in oil prices, which again, time spreads, selling out of the money put spreads, things of that nature. I don't think that trade as an idea is really going away anytime soon. The last place is the things that have really kept the market moving, stocks like Amazon, hovering around highs, but still got a ways to go. Google's got a ways to go for their highs. Microsoft, some of those are starting to come back a little bit off of the not great earnings, but they're getting scooped up again. And I think that's what we have. I don't expect VIX to drop too much below 13 because of Brexit, but I think we kind of have just a slow meandering up market till then. And that's what we have. All right, everybody. So I will see a lot of you at our Saturday webinar. And until then, we'll be in our chat room. We'll be starting momentarily.